is the very first time I'm going to conduct the lectures through the video recording, especially this subject under the third year second semester. The course code is BBAA 3272 Advanced Business Taxation. In this subject will be covered by uh, the following main contents. Especially in this subject, we will study about the calculation of assessable income from sole proprietor business and partnership income tax calculation. Then we will study about the company income tax calculation, value added tax and the economic service charge calculation. Then income tax calculation for charitable institution, clubs and trade association. Then finally we will discuss tax administration. These are the subjects under this course unit we are going to study. Then I want to show uh, I already uploaded some handouts up to handout number 3. Today I am going to explain the handout number 1, which is related with the calculation of assessable income from business, which is very important for if we want to calculate the company income tax calculation or any sole proprietor income tax calculation. The business income is a major income of that particular uh, individual. So this first handout will be related with that particular area. If, we will see the first handout. Yes, the calculation of assessable income from business. This is the first handout, and uh, these are the contents of this presentation. The definition of real business profession and vocation, calculation of gains and profits from business, allowed expenses, allowed income, disallowed expenses, disallowed income. The first we should understand what's the meaning of business. If you take taxation, which is related with related with act, we have to follow some act, especially Inland Revenue Act, for the tax purpose. According to the Inland Revenue Act, we take business. They provided a very clear definition for business. The first one is uh, under section 195, the rate, provision or vacation or isolated arrangement with a business character, however short the duration of the arrangement. Then they provided business mean past, present for prospective business. If you take business, there is a possibility for they may start. They started fast. Present, they may start. In future, they may conduct some business activities with the customer. So business will include past, present, and prospective business. The examples I provided some examples for this business according to the act. There are several examples. You can see that service fee, uh, consideration received in respect of trading stock, gain from realization of capital assets, amount calculated from realization of depreciable assets. Like that, I provided several examples for business according to the act. However, it excludes an employment, because employment it is a separate part. Employment will not be considered under the business. Business is separate, employment is separate. If you take the assessable income, under the assessable income, there are four major income. Four major income. The one is the employment income, business income, investment income, other source of income. So if you are having any employment income, that should be calculated separately under the employment income. That will not be included under the business income. So then I already provided what are the things will not be included under the uh, business income, the exempt amounts and the final withholding payment. For an example, I can explain. If you take individual, they have to pay. They are having the responsibility to pay 5% withholding tax on their interest income. If they paid such withholding tax on that particular income, that will not be part of business income. That should be included under the investment income. Like that, amounts included in calculating person's employment income, if we included any amount under the employment income, that will not be included in the business income. Uh, Next one, we should know what is the meaning of profession, what is the meaning of vocation. Any person engage in the professional activity with his special skills and knowledge, it is his or her profession. For an example, if you take the lawyer, if you take the chartered accountant, they are the professional people. So that if they earn from that profession, that will be considered as a profession. Then vocation is the different. Vocation is an occupation to which a person is specially drawn, or for which she or he is suited, trained, or qualified. Most probably out of his inborn skill. For an example, you can take singer, dancer, uh, actor. Those will come under the vocation, not under the profession. Profession is that should be gained, that should be reigned from a professional institution. For a chartered accountant, a lawyer, like that will be considered as a profession. Then we should know the calculation of gains and profit from business. If you take this part, generally we are calculating the accounting profit, financial accounting profit based on the accounting standard and accounting concept. There are several accounting standards uh, and accounting concept. Based on that, we will calculate the accounting profit. However, if you take the tax point of view, if the Inland Revenue Department or tax authority will not be accepted accounting profit to pay in, to calculate on that accounting profit. That should be different. You have to calculate the taxable profit from the business. Taxable profit is different than uh, financial accounting profit, because if you take the financial accounting profit, that financial accounting profit calculated based on the accounting concept, accounting standards, financial reporting standards. So uh, if you take the taxable profit, that should be calculated based on the Inland Revenue Act. So for this point, we already sometimes we already calculated financial accounting profit. Then we have to convert that financial accounting profit as a uh, taxable profit. That is important. Taxable profit. Then you may think how to convert financial accounting profit as a taxable profit. You have to convert financial accounting profit as a taxable profit uh, with the consideration of act. There are several acts provided by Inland Revenue Department. You have to follow the act. Then you have to do the adjustment with the financial accounting profit. Then you will have the uh, taxable profit. Then you are having the responsibility to pay the tax on taxable profit. You can't pay tax on financial accounting profit. That's why we should study how to calculate the taxable business income. That means the business income is one of the part under the assessable income. So we have to calculate. We have to know how to calculate the business income for the taxation. So I provided very clearly. I provided one table how to calculate the taxable business income. So I already said you already prepared the financial accounting. Now you are having the net profit according to account. You already calculate the net profit in the financial accounting. So you should take net profit before tax. That is important. If you take a financial statement, there is opportunity to take the net profit after tax, but which is wrong. You have to take net profit before tax, because in that financial accounting, your income tax, that is a provision, not actual. So you can't take net profit after tax. That's why you have to take the net profit before tax. Then you have to do the adjustment. The first one is a disallowed income. Some income cannot be allowed according to the Inland Revenue Act. If you take in the financial accounting, you already allowed some income. For an example, interest income, dividend income, you allow. But that is right for the financial accounting. But if you take the taxation, which is wrong, because that should be listed, that should be calculated under the investment income, because it is not a business income. So if you have any disallowed income, that should be reduced. That should be reduced from the net profit before tax. Then allowed income. If you take the allowed income, the most of the income you allowed in the account. For taxation also that can be allowed. For simply you can understand sales or revenue. That's a major part of the income that will be allowed according to the financial accounting as well as for the taxation. There's no problem. But if you take the specific one example for this allowed income, if you dispose any non-current assets in the financial accounting, you will calculate the disposal profit or loss in the financial accounting, which calculation is different. But if you take that profit cannot be allowed for the taxation, because the disposal of non-current assets profit should be calculated according to the Inland Revenue Act. The profit calculation on the disposal for the financial accounting and taxation both are different. So we need to calculate the based on the act. So if you have any allowed income, that should be added with the net profit before tax. Then disallowed expenses, there is a possibility. If you allowed some expenses in the financial accounting, however, such expenses cannot be allowed in the calculation of taxation. For an example, you can think about depreciation. Depreciation cannot be allowed. You can take very simple example. Why depreciation cannot be allowed? You can take two companies. The first company, company A. Second company, company B. They purchased a delivery van for 2 million on 1st April 2018. They purchased that delivery van for same purpose. Both company they are using the same similar purpose. But A company decided 20% depreciation on that delivery van. B company decided 25% depreciation on that delivery van. So in the financial accounting, both company calculated charge depreciation on the financial statement at different rates, but similar amount they spend, they are using for the similar purpose, but they did the depreciation at the different percentage. One company did the depreciation for the 20%, another company did the depreciation for the 25%. That can be accepted for the financial accounting, because that depreciation percentage should be decided by the management with a consideration or discussion with the external auditor, they may get idea or suggestion from the external auditor, but the responsibility belong to the management. They have to decide what is the percentage most appropriate for that particular non-current assets. So a company, they can say we based on our point of view, the depreciation for that delivery event 20%. B company, they can say we are using the more time, that's why we decided 25%. Both are correct for the financial accounting, but if we take for the taxation, which cannot be allowed, because under the principles of tax, there are several principles of taxation. The one principle is equity. The equity means every persons are equal for the taxation. Any person cannot do separate treatment. So they have to follow the same percentage. That's why depreciation disallowed. So you can calculate the capital allowance, which can be allowed according to the Inland Revenue Act. According to the Inland Revenue Act, they clearly stated what percentage should be applied for each and every non-current assets. Based on that percentage, you can claim capital allowance, but depreciation cannot be allowed. The next one is allowed expenses, then deductions. I already said the capital allowance, which is not under the financial accounting. Depreciation will be considered under the financial accounting. For that non-current assets, you may calculate capital allowance. Then you can deduct those amounts from your net profit before tax. Then allowed income. Some income you allowed in the financial account. That income can be allowed for the taxation. So in the financial accounting and taxation, there's no different treatment. So there's no adjustment, because you already added in your financial statement. So that amount can be accepted for the taxation. Again, you don't need to add, because you already added with your profit. Then allowed expenses or deduction. You may think, right? You allowed salary as expenses under the administration cost in the financial statement. If you take for the taxation, salary is one of the allowable expenses. So you already deducted that salary as expenses in the financial accounting. So you don't need to deduct again in the taxable or assessable business income calculation, because you don't need, you already deducted, that can be accepted for the taxation. So you don't need to deduct again. Then you will get the assessable income from business. This is the basic brief idea how to calculate the assessable income from business. Then I want to explain allowed expenses. Allowed expenses, you should know some expenses can be allowed according to the Inland Revenue Act. Act specially stated some expenses, but in general point of view, any expenses are related with the production of income, such expenses can be allowed. That's a general point of view. For the taxation, you can take examples: salaries to staff, advertisement cost, electricity charges, telephone charges. Those expenses can be allowed. In the financial accounting also, those expenses can be allowed. So there's no treatment, or there's no adjustment when you are calculating the accessible income from the business, because you already deducted into a financial accounting. So you don't need to deduct again. Then allowed income, some income can be allowed according to the Inland Revenue Act. For an example, if you take any what do you call any soda distribution company, in that situation, old bottle sales can be allowed. For that soda distribution company, you can't allow interest income or dividend income, because which is not related with the business. If any income, it is related with the business or nature of the business or purpose of the business, those income can be allowed. Then disallowed expenses. In the act, some expenses very clearly stated, such expenses cannot be allowed. Especially, you can take depreciation. The I provided some expenses here. You can take very simple example of that disallowed expenses. We will discuss later very deeply in this chapter, in this handout. I want to provide the basic understanding regarding the calculation of the business income. So you can take penalties. Penalties cannot be allowed for the taxation, but penalty you deduct, you may have an idea. Sometimes the penalty is the one of the expenses in the financial statement, but that expenses cannot be allowed for the taxation. Donation cannot be allowed for the taxation. In the financial accounting, that donation can be allowed. So some expenses cannot be allowed. So if we have any disallowed expenses, those expenses should be added with the net profit before tax for the taxation. I provided some examples, some expenses, but which are example for the disallowed expenses, especially entertainment expenses. It is one of the expenses in the financial accounting, but in entertainment expenses cannot be allowed for the taxation. Then I want to explain under the disallowed expenses, domestic expenses. The following domestic expenses are disallowed according to the section 197, according to the Inland Revenue Act section 197, where an individual incurs expenditure for himself. For an example, you can take Mr. Kumar. He is one of the sole proprietor. If he included some personal expenses in the financial accounting, such personal expenses cannot be allowed for the taxation, because he did that expenses for his person, which is not related with the nature and the purpose of the business. If any expenses related with the production of income, such expenses can be allowed. So any personal expenses cannot be allowed. So you have to add again that amount with the net profit before tax. I provided several examples for that expenses. The individual incurs expenditure for himself. I provided several examples. You can take that idea from that. Then taxes. The following taxes cannot be allowed according to the Inland Revenue Act. So when you are going to calculate financial accounting profit, generally you are including some expenses for the taxes. Especially, you will make the provision for the current year income tax. But in case of taxation, the following taxes cannot be allowed. The first one is the income tax payable, which cannot be allowed. Which cannot be allowed under the taxation. Economic service charge, that is also disallowed expenses. Value added tax or NBT on financial services. But NBT nowadays there's NBT abolished in Sri Lanka. There's no NBT. However, you should have the idea NBT on financial service, that is a disallowed expense, because our this cost unit we for this cost unit we have to consider 2018 and 19 year of assessment. For 2018 and 19 year of assessment, NBT is one of the tax. Group insurance levy, super gain tax, bars, and like that I provided several examples. Then disallowed income. So some income cannot be allowed. I already explained. If you are having the dividend income, interest income, that is not related with the business. There's no relationship with the nature and the purpose of the business. Because if you start the soda distribution company, what is your nature and the purpose? You have to purchase bulk from the soda production company, then you have to distribute in that particular region. From that you can earn the money. That is a nature and the purpose. But if that soda distribution company received any interest or dividend which is not related with the business, so such income cannot be allowed. But such income you allowed in the financial accounting profit calculation. For the financial accounting, such income should be included. Under the other income, you have to include the interest from fixed deposit. That is accurate in the financial accounting, but which cannot be allowed for the taxation, because that interest from fixed deposit should be included separately in under the investment income. So you already added interest income, dividend income in the financial accounting. So your net profit before tax will show the more amount because you added. Now you are having idea such interest and dividend cannot be allowed for the taxation. Then you have to remove that amount from the net profit before tax. So you have to put interest and dividend in the minus column. That should be removed from the net profit before tax. So these are the things I wanted to discuss in this presentation. I hope that you already went through this uploaded study materials. So you may have get a understanding through this study material. If you have any question or any unclear area, you can contact me through the available sources. Then I will try to give my best suggestion or solution for your question or any unclear area. So in this handout, I wanted to discuss the definition of trade, business, profession, and vocation. Then calculation of the gains and profits from business, how to calculate. I already discussed with that format. And allowed expenses, then allowed income, disallowed expenses, disallowed income. Allowed expenses I discussed with some example. Allowed income I discussed with some example. Disallowed expense I discussed with some example. Disallowed income I discussed with some example. So these are the things I wanted to discuss. So I hope that you are allowing this course unit through the LMS. I will upload this video in the LMS. If you are able to download or watch this video lectures, you can download and watch. If you have any unclear area, please inform to me. I will prepare to give my best. Okay, thank you very much. We will meet again with another presentation.